Welcome everyone to another edition of the Story Trading Weekly Meetup. Tonight we have Ashley Day, contributors Ashley Day and Paulo Gonzalez, longtime contributors to our group, presenting a couple of stock picks. Before we do that, quick look at the disclaimer. Story Trading is not an investment advisor, and that includes our guest presenters, unless they say otherwise. Investing in securities involves significant risk of loss. This event is being recorded. It's going to be available to our paid subscribers throughout the week. And after the trading week is over, we'll make that available to outsiders on our YouTube channel. So what we do, Story Trading is an investor network. We aim to beat Wall Street insiders at their own game through crowdsourced collaboration of our 4 pillars of fundamentals, catalysts, sentiment, and technicals in order to understand the story behind the trade. And of course, you guys here tonight at the VIP program have access to these special Zoom events for an extra edge. So tonight we'll go as usual through a quick performance review of previous picks. We'll have Paulo go first and then Ashley, and then we'll turn off the recording for our trade of the week. So as far as our VIP presentations go, you can hop over to our website anytime you want, StoryTrading.com. Just click on performance, and then you're going to see all of the presentations since inception. We moved a few. There are a couple changes here. Rob Muck closed out Real Networks at a 405% gain. I missed that Florian closed out Unity on February 8th, so we put that in there at an 83% gain. So that decreases our return here, still ahead of ARK. We're gonna merge these together, so it includes the close picks, but we're comparing ourselves with ARK and QQQ and everything here. So everyone's doing a great job. Okay, so with that, let's turn it over to Paulo. If someone can give him admin rights. Paulo?
I can unmute him, but I can't give him admin, right?
No, I meant, yeah, for the screen share. So
Can you hear me?
Yes.
Okay, yeah.
Okay, Paulo, you should be able to share your screen now. And
Can you see it now?
It's coming up.
There it is. There it is.
There it is.
Okay.
We don't see you on video though. If you
You don't see me? Well, I'm here with the video.
Let me just check my. Oh, okay. Go ahead. You can start your video now, Paulo.
All right, perfect. All right, for you guys that don't know me, my name is Paulo Gonzalez. I've been investing probably for the last 10, 15 years. I got seriously into investing after the HMNY debacle 3-4 years ago. I really started getting interested into what Mark Gomes was doing and actually what Objn were doing, developing the new platform. So I've been learning a lot, but I've been getting really serious, seriously for the past 3-4 years. And I've actually looked more into the healthcare industry and biotech, although I don't have any background into the biotech space. That's something that has interested me for the past. And of course, as an industry that it's hit or miss. And I think that Dan Carlson can attest to that. I think he's been doing pretty well, but I actually have done really well, especially with my last picks. BioChrist, hold on.
Better.
Start the
Yes.
video.
That's okay. Better. Yeah.
Okay,
Okay.
so especially with BioChrist and then Livongo. So I like that space, and what I wanted to do today is just go back to a conversation that you guys had through the VIP room and through the Mark Gomes room as well. About 2-3 months, we were all talking about genomics. A lot of companies were getting a lot of attention, and we're capitalizing on this new technology and new platform, and we started discussing, all right, what companies have benefited the most? And I know we talked about Bionano, BNGO, as a stock that my wife actually bought at 50 cents, and she's still holding it. It's a very small position. So it kind of hurt me that she's doing a lot better than I am. And then you had Jonah Lupton actually presented DermTech that is also related, to genomics. And for those of you that don't know what genomics is, and I put kind of like a small definition right here, is just using computer and math techniques. So this is known as bioinformatics. What the genomic researchers do, they actually analyze enormous data from DNA to be able to find variations, to be able to find new diseases that are coming through your DNA, or those variations that are typical to those diseases, and also what drug response you're going to have depending on those variations that you have in your DNA. So I started getting interested into that space and looking into other companies that probably didn't, have the attention that BioNano had already, or the DermTech. And I found a smaller company that I'm about to present right here. But I was also interested into, what space genomics actually, is just getting started. And I found that antimicrobial resistance is one of them. I put some data right here. I'm not going to go through all of it, but you can see here, 700,000 deaths just in a year, according to the World Health Organization, just from bacterial infections. And then you have about 50,000 of them just from drug-resistant infections. And then this is a cost to the health industry for about $20 billion just in the United States alone. So the World Health Organization already sees it as a top 10 public health threat, and that's especially after COVID-19, and you're gonna see why right now. And this especially because of the misuse and overuse of antibiotics to treat COVID-19. Something that I have found, especially from the presentations from the stock that I'm about to present. They have some data that, of all of those patients that go into an ICU right now because of COVID-19, probably around 10 to 15% of them develop bacterial pneumonia, but 75% of them are treated actually with antibiotics. So we go back again to, we're developing that resistance and that overuse to antibiotics and antimicrobials. So we're gonna see an exponential growth right now just because of COVID. We might not have the data right now, but we'll see it in a year or two of how many people have developed, those antimicrobial antibiotic resistance. Antimicrobial, we're talking about viruses and bacterial, and antibiotics is just actually antibacterial. So we're talking, cost to the economy. It's also, it's going to be dangerous right now when you have surgery and cancer chemotherapy because of increased risk right now, because so many people are going to have antimicrobial resistance or antibiotic resistance. And then also something that is happening is pharmaceutical companies are not developing antibiotics anymore. And this is just because it's not profitable for pharmaceutical companies. Just very few antibiotics have come into the market in the past 30 years. And it's just because of that. It's just not profitable for these companies. So this is a main issue that I was able to identify. And I think here, let me see if I can go to the next slide. The company that I found was OpGen. And actually, I didn't find it. Sheila had been talking about it for the past 3 or 4 months a lot. And so I had seen the name before, and it interested me. And when I saw that was the space that they were in, I started investing and looking into it. And actually, I got some help from Danny, from Daniel Sequeira here, looking into the company. Actually, Florian helped me look into the financials as well. And we actually liked what we were looking at. And that's why I wanted to present it to you guys. And OpGen, actually put right here, it's actually 3 companies in one. We had OpGen that is here in Maryland, in the United States, but they decided to combine operations with Curitis, they're in Germany, and then Ares Genetics, they're in Austria. And Ares Genetics was actually a subsidiary of Curitis. So now these 3 companies are called OpGen right now. We saw that last Friday. I think they were trading about 294. They're staying, into that same range, $2 to $3 for the past year. but we're going to see that there's some inflection points right now. We're going to have some news in the next few weeks that I think is going to make this company or this stock go up substantially. So again, what I said, there are three companies in one, and what OpGen wanted was to have an entire platform in terms of the genomics and in terms of developing this genomics testing for antibiotic resistance. You have three things here. The Aquitas AMR and Lighthouse is actually kind of like the software that it was developed by OpGen to be able to detect and predict antibiotic resistance or antimicrobial resistance. The ARIS one is artificial intelligence bioinformatics. It has been able to develop and gather data from around the world in terms of genomics and antibiotic resistance from patients. And then the Universe system was developed from the other company, Curitis. And there's actually, it's a diagnostic solution right now. It's a device that they sell to clinicians and hospitals and labs, both in the United States and in Europe right now. And that's actually the device. So what they want to do with those three things, they want to develop an entire platform based on genomics and based on those devices. So actually, I think they put it here in words better than I have. We harness the power of informatics and genomics to identify antimicrobial resistant organisms quickly and accurately, with an aim to improve treatment at the patient, hospital, and network level. And you're going to see that the testing that he's traditionally done for these antimicrobial resistant diseases, it usually takes 2 to 3 days, what they have been able to develop. And they're not the only ones, that were the companies that have developed it too. But what they want to develop is just, testing that takes no more than 3-4 hours. So if somebody's at the ICU and has, some kind of disease, and they actually find it's a bacterial infection, they find it in 3 or 4 hours, and they know what kind of antibiotics they need right then, instead of waiting 2 to 3 days for somebody within the ICU to get treatment, and then that treatment actually might not work because they don't know what antibiotics will work for that kind of disease or infection that they have. Here again is what they have, that Aquitas or Aquitas Lighthouse is a software that identifies, tracks, and predicts antibiotic-resistant infections. They draw these from genotype and phenotype from more than 15,000 clinical isolates, and then they develop a powerful algorithm to be able to read that data that they're getting. And then the actual device is the Universe system. That's what they call it, and that's what they've been selling in the United States and in Europe right now. And this is, just to be able to fast and accurately read the tests that they get and get information to clinicians on what the disease of the infection is and the kind of treatment that they should be given to whoever is in the ICU or the patient is. Again, this is the treatment that they have. As I said, they want to develop an entire platform, develop the synergies that they have with the two new companies that they just acquired. The platform for the FDA, and I forgot to say, this is an FDA cleared already system to track the infections, especially for lower respiratory tract infections like pneumonia. It's approved in Europe as well. The software for the Aquitas Lighthouse. I'm going to come back to this Aquitas AMR gene panel. It's some news that they're waiting for. They're developing also a device similar to the Universe system, but including all the genomics information and the data that they're getting right now from ARIS Genetics and from their own they had in the past, and they're waiting for that FDA clearance. I'll go a little bit more into detail in the next slides. And then, of course, the ARIS Genetics, which is just prediction through the data that they have and genomics information. Some of the advantages that I mentioned before here with the Universe is less than 5 hours to get the information is direct from specimen. There's no culture or growth required. And then it just allows faster treatment. And then in traditional, it takes 2 to 3 days to get those results. And then, of course, the increased length of somebody staying in an ICU, which of course develops, more either high mortality or more diseases, more infection, more bacteria while you're in the ICU. Of course, increased costs for hospitals and for the patient. In terms of the total addressable market, just for the universal system, what the CEO has spoken before, he thinks there's probably about 1.5 billion total addressable market with the bacterial infections that he sees, treating in hospital settings, which is especially pneumonia, and you're gonna see that more right now because of COVID-19. Then you have your UTIs and other infections and blood infections that you see in these hospital settings. And he thinks there's about 9 million to 10 million cases, both in the United States and Europe, in about 50-50 split with those. And then I want to come back to this because this is the one that is pending FDA approval, is the Quitos AMR gene panel, which according to them is the most comprehensive PCR test in the market right now, but they're just waiting for the FDA approval. For me, I've been waiting actually for this because, and I'm still kind of hesitant. I don't know if they're actually going to get approved or not because the FDA has asked for information twice during the past year and a half. The CEO is very adamant and very clear that he knows he's going to get FDA approval, that they have resolved all the questions and all the issues, but there is certainly a risk that the FDA won't approve this product. But according to the readings that we have, it looks like they have answered everything that they can and that there's a system that works. It's actually in a hospital setting right now in New York for research, and they have published papers that show that they have good results with this new system. So hopefully we'll hear something on all the interviews that the CEO has given. He expects a decision from the FDA this quarter. So we have to be waiting, the next 2 weeks at least or maybe less for that decision. And then the way they commercialize their products, the universe system, they deliver it in the US as a direct sales method. And then they do have distribution channels all around the world. I want to go back to the distribution channel here in Beijing Clear Biotech in China, because it's something that we discovered that we think is going to bring the most value to this stock. And then in terms of financial considerations, here actually they have been very clear on how much they have been making and spending. They put it on their presentations. We see the revenues for 2018, 19, and 20. Lower revenues for 2020. They blame it on COVID-19 setting. Most of their revenue actually comes from Europe, and the United States is gaining traction, but I see kind of like a 60-70 split between Europe and the United States. And they blame the restrictions in Europe, trying to get into those hospital settings and healthcare facilities to sell their products during 2020. And that's the lack of growth or less revenue in 2020. The reported revenue for the quarter 4 of 2020 is going to be about 1.3 million. They are reporting the 25th of this month, but they gave some preliminary results already, but they haven't given any guidance about what's going to happen in 2021 because of COVID. They have about $13.3 million in cash right now as of December of this year. They have closed a PIPE financing of 10 million, and they raised 25 million with the same U.S. healthcare-focused institutional investor. And so far, they have raised in the last year and a half about $60.3 million. In terms of the capital structure, we have about 33 million shares outstanding, common warrants, 10.4 million, equity awards, about 2.3 million, and then fully diluted shares outstanding, we have about 46.1 million. We were looking into the numbers with Florian, and we saw actually, these numbers as of March 8th, that they had about 46 million. And then just last week, we realized that they had forced this institutional investor to exercise about 4.8 million warrants, which is about $9.8 million. And they also kind of like gifted the investor another 3.1 million in warrants with a strike price of 3.56 cents. So we see the difference on March, what they say they had about 45 million. But this is what we see today, right now, we see about 48 million warrants. I mean, it's stock outstanding, shares outstanding. And then this is what I wanted to talk about here. I've highlighted, of course, we have the recent news flow, and then they're very open and they issue a lot of press releases. But the main one that we saw about 2 weeks ago, and that's we saw this spike of the stock going from 180 to $3. First, it was the result of the publication, but something that actually went kind of unnoticed, and that was when the market took a dive, was that NMPA approval for the Curated Universe system in China. And this is kind of like the FDA approval in the United States. So they have been approved for that system. There were not many news about it. And like I said, the share price didn't move that much because it actually happened exactly when the market was going down. It just moved when they published those final results on the study. But this is where we see the value in the Chinese market right now. And we see it, and I'll come back to this, expanding to China. Look at the last paragraph, something that we have found. Beijing Clear Biotech, which is who they partner with in China, they have agreed to a contractual minimum purchase of 260 universe systems and about 1.5 million cartridges for an 8-year exclusivity period. And this is about $180 million revenue in 8 years. If we divide it by 8, is about $22.5 million for a company that is making $5 million a year right now. So this is something that we see. We still have to wait for the second NMPA approval for the pneumonia cartridge, which the CEO says he's very sure he's going to get because he just got the system approved. Now he needs to get the cartridges approved, and then they can start the commercial launch. If they start the commercial launch, the contractual obligation by Beijing Clear Biotech is $180 million for 8 years. This is where we see the value. It's fairly valued right now where it is, with the 48 million shares outstanding and $2.93 of share price. But once we see that they get the second NMPA approval by China, and they start making, $22 million a year, just with this deal alone, this doesn't have to do anything with the FDA approval of the other system. This is what we see. And we haven't seen a lot of noise. We've read, a lot of the comments. Not many people follow this company right now. It started growing in followers for the past 2 months. But there are no other information that we can really find out there from them, from people following this stuff. And then we have the technicals from Sheila. She says, it came out of the oversold area this past week and it's moving upwards. She says there's momentum in all indicators. And then she sees support in the 269 area and then resistance at the 343 area for this stock. And I think that's what I have. They have preliminary revenue that they published in January. They said they're thinking that they're going to make about $5.2 million this year. They have a strong balance sheet with $13 million cash, but we know now they changed a little bit with the warrants. And then the fourth quarter revenue was at 1.3 compared to what they had in quarter 4 of $0.8 million a year ago. Leave it up to you guys for any questions.
Great, thank you, Paulo. Awesome presentation. I have a question right off the bat. While I ask that, guys, if you have questions, just raise your hand to get in the queue. But my question is fully diluted, so 48 million shares. What would be their net cash position with all those warrants converted? Basically, I want to try to figure out what the enterprise value is here.
I have some information from Florian that he just sent right now. I don't know if Florian, if you're there, you can help me out with that one. But I know with the exercise price for those last warrants were, I think, at 194. And let me see, and they actually got $9.4 million of that. I don't know how much of that will be actually converted just into cash. So I'll have to get back with you on that one.
So
but
as of this number of 13.3 million cash as of December 31st, did they have any debt?
not on that one.
Raised 25 million. Okay. Total cash
And
raised.
then both of the rounds of financing has been the same institutional investor.
Okay. All right, great. Turn it over to Rob. Do you have any questions while we?
Yeah, I have a few questions. The recent raises, the 25 million and the 10 million, were they for buying other companies or?
No, actually, it's for their own operating expenses.
Okay.
I think the cash burn right now is probably at a rate of about $1 million a month or $3 million a quarter. I want to see what the guidance is going to be, in 2 weeks, and actually what the real numbers are. But I'm projecting is going to stay around the same.
And then what caused the revenue drop from 2019 to 2020?
The CEO keeps saying it was COVID, less access to healthcare facilities, especially in Europe. I was trying to look, into the reports, and it looks like, I think I actually have something here. Can you still see my screen?
Yeah.
Yep.
Let me see. It's right here. The product sales. So when they say, domestic is about 300,000 that they have for Q3, and then 700. So it's 70% is coming out of Europe right now. So they were right when they were saying there were more restrictions in Europe for them to access healthcare facilities, hospitals, and labs to be able to sell their products.
Got it. And then as far as the products, so I'm a biomedical engineer by trade, so the product definitely makes sense to me. And everything they're doing like fits the sniff test. I know people that work in hospitals, and they say people get antibiotic resistant bacteria and people just end up dying all the time. It's pretty common. So they're meeting a good demand. I did worry about the China order though. You have to be careful. You get large orders for China for medical devices or stents, and they could actually copy or mimic your technology and just take it. So I don't think that would happen in this case. It's like rare. I've seen it happen working for medical companies. Just look into it and see if that's like a potential risk. But other than that, I really like what this company is trying to do.
Thanks.
No problem.
Great, thank you, and a shout out to Sheila as well for bringing it to our community and bringing it to your attention, Paulo. So appreciate that. Do we have any questions from the floor?
Yeah, if anybody wants to raise their hand, click on participants, and to the right, there'll be an option to raise your hand. We can unmute you or just type into the chat.
Okay. Solid presentation. I think maybe some people need time to digest it, and we can collaborate in the chat room. So actually, let me. All right, we actually are opening a OpGen research group, OPGN. Stephen will drop that link in here or in the VIP investing group so we can discuss OpGen over there. Paulo, actually, one last thing. What was the FDA, the catalyst for FDA approval? Like, is there a date for that?
It wasn't. They submitted to the FDA back in 2019. Then the FDA requested information twice from them. And the FDA had been really slow, especially on medical devices, to answer because of COVID-19. But the CEO is adamant that is happening this quarter. So we have 2-3 more weeks within this quarter. So I think we'll probably hear something the next few weeks, and either positive or negative.
All right, cool. And just got a note from Florian in terms of his calculations for enterprise value. He has it 143 million right now.
Okay, perfect.
All right, very good. Thank you so much, Paulo.
Thank you.
Yep. Now, before we turn off the recording and go to the trade of the week, just want to let everyone know at StoryTrading.com, you can just go and click on events and see what's coming up. We have back to finally a happy hour. We've done a lot of special events on Wednesdays. So this Wednesday, we'll have a little happy hour. Maybe. I'm talking to a lot of CEOs and things like that. There's always a last minute chance they have a special guest on Wednesday. But for now, we have the happy hour on Wednesday. And you can see the rest of the schedule there. There's one change, March 29th. It's going to be a Monday instead of March 28th, instead of that Sunday night. So we'll let you know the topics on those weekly meetings soon. Also, remember to follow us on YouTube, on Twitter. Like and subscribe, please, at YouTube and at Twitter. We appreciate that. So thank you very much, everyone. We're going to stop the recording and go over to our trade of the week.